The Fed's hawks have not appeared with the comments recently, so Wall Street is searching for clues from macroeconomic data. The market has been puzzling over reports released this week. On a Friday, they found some food for thought. InstaForex analysts are ready to share their forecast and conclusions. As expected, Wall Street found fainter signs that the labor market is cooling down. The stock indexes regained some early losses. The news on the increase in unemployment claims is viewed as good news for the stock market. The benchmark indexes closed with gains yesterday. The Dow Jones added 183 points, or 0.55%. The Nasdaq logged the biggest gains and closed 1.13% up. The S&P 500 rebounded 0.75% and approached 3,963 points. The three stock indexes traded moderately higher in the New York pre-market. The S&P 500 is expected to trade in the intraday corridor between 3,890 and 3,990 points. Wall Street shared their weekly update by the U.S. Labor Department, in particular the news on the increase in initial unemployment claims to 230,000 last week. Last week, investors found out the strong ISM non-manufacturing PMI and the non-farm payrolls. The S&P 500 has lost 3.6% since early December. It finished yesterday's session in the green, having interrupted a 5-day losing streak. 9 out of the 11 sectors included in the index perked up, with the high-tech sector taking the lead. High-tech giants rose 1.6%. The stocks of the companies with a mega market capitalization, such as Apple, Microsoft, Nvidia, and Amazon, climbed 1.2% and 6.5%. Remarkably, Microsoft shares closed with a 1.2% jump. The Federal Trade Commission blocked the application of the high-tech giant to prevent its purchase of the video game developing firm. The energy sector did not win back losses and closed 0.5% down. ExxonMobil rose 0.7% after its announcement of expanding its annual share buyback program. The pharmaceutical sector also showed strong performance. Moderna shares grew 3.2% because the U.S. Food and Drug Administration approved the company's anti-COVID vaccines for kids over 6 months old. The regulator also green-lighted vaccines by Pfizer, whose shares jumped 3.1%, and its partner BioNTech, whose shares listed on the U.S. exchanges surged 5.6%. Today, the market sentiment is sensitive to the U.S. factory inflation data and the Consumer Confidence Index by the University of Michigan. The U.S. PPI edged up 0.3% in November from a month ago. The reading coincides with the upgraded growth in October and an uptick higher than the consensus of a 0.2% increase. The PPI accelerated 7.4% in annual terms, the slowest growth since May last year, but higher than the expected 7.2% growth. Obviously, this report instantly dampened faint optimism and the stock indexes lost early gains. The fragile hope could be hardly revived by the survey on consumer confidence, which is due tonight. Wall Street took a breather only on a Thursday. The market is on track to close the week in the red. The US dollar went through a lame session. Its index extended a losing streak for a third session in a row and skidded to 104.50. The intraday corridor for the index is seen between 104.50 and 105.20. The greenback is wound down by a grim forecast of an inevitable recession. Its trajectory is obscured due to mixed economic data. The US dollar will find support from the US Fed next week. Until then, it depends on the macroeconomic data and the market response to them. Amid expectations of the moderation in the pace of the Fed's rate hikes, the US dollar index has slumped more than 8% since its peak in September. Dovish comments by Fed policymakers are responsible for its steepest quarterly decline since 2010. The fresh PPI instantly revived inflation fears and propped up the US dollar. Next week, the economic calendar reminds us about a series of crucial events: the US CPI for November, policy decisions by the Federal Reserve, the Bank of England and the ECB. The Canadian dollar also slipped yesterday. The USD CAD pair climbed to 1.3610 intraday, having added 0.11%. The loonie remains under pressure. The currency pair is likely to trade in the corridor between 1.3580 and 1.3650. The commodity market is the culprit for the looney's weakness. Oil prices are not capable of developing a rally. Brent futures stayed at about $76 a barrel, but they are set to close the week with a sharp fall. Financial markets are unnerved by recession prospects, which overshadow the optimism because of China relaxing COVID restrictions. The benchmark rate has tumbled 10% this week, being under pressure from economic concerns. The closure of the Keystone pipeline also obscured the outlook for the oil supplies. The Keystone pipeline in the United States was shut after more than 14,000 barrels of crude oil spilled into the creek in Kansas. The reason for the leakage is unknown. In this context, Brent crude rose 0.3% intraday to trade at $76.44 per barrel. The crypto market revealed a touch of optimism today. Bitcoin approached the upper border of its trading range and settled above $17,200. This happened before the release of the US PPI. The fresh statistics sparked off alt fears and revived bearish trends. Bitcoin again slipped below 17,200, pushing down altcoins. As for the intraday outlook of Bitcoin, the token is set to trade in the same range. If the price climbed above 17,200, it might reach the high of 17,500. Otherwise, the crypto could sink to $16,800. To sum up, Wall Street has not been able to regain optimism on a Friday. Despite the gloomy outlook, InstaForex team wishes you profitable trades. Have a nice weekend and see you next week.